What's up, guys? Bang, bang. Today is a special episode. I've got Phil Rosen, the co-founder of Opening Bell Daily, here with me. We talk about the U.S. economy. We talk about whether the stock market is going to crash. We talk about home affordability. And at the very end of this, I tell you, if I was president for a day, what I would do to try to help solve home affordability so that people can chase the American dream. Today's conversation is a lot of fun. I learned something from Phil. Hopefully you guys learned something from both of us. Here is my episode with Phil Rosen.
Pomp, good morning.
Good morning. How are you?
I'm doing great. It's great to be back. The big news today on Wall Street was JP Morgan's top strategist, Marko Klanovic, they announced that he's leaving. I don't know if he's leaving or they're letting him go, but he was the most bearish guy on Wall Street. I think he had the S&P 500 outlook at 4,200, and right now it's at 5,500. So I wanted to, we could start there. What is your take on how stocks are going to perform for the rest of the year, given that they're just ripping?
Yeah. Maybe the stock market's going up so high that the bears are quitting.
Yep.
Is one way to look at it. But what I think is probably more likely, the stock market is a byproduct of what's happening in the economy, not so much that the stock market drives what happens in the economy. And I think that's a really important distinction because monetary policy obviously has been, kind of very volatile across the U.S. Kind of central banker, world. But also what we have seen is we have seen a brand new set of businesses that have taken off as well. So if you start to unpack some of the data, right, we have this very kind of multi-outcome situation. So on one hand, you have the S&P continues to hit all-time highs. You have the highest concentration of the top 5 stocks. It's now like 26%, which never happened before in history. You also see incredible outperformance for the tech sector specifically. The S&P 500 tech sector is compounding over the last 5 years at over 25%, almost 26% annualized. And so when you look at that, you say, wait a second, like the public market tech companies are outperforming the average private market venture capital funds. And so naturally, you're going to get these incredible numbers. Now, you can look at that and say, well, if it went up 25, 26% every year for the last 5 years on average, does that mean it's going to keep happening? Like, is the momentum in play? And you and I have talked about before, buying stocks at all-time highs in kind of an index usually is a pretty good move based on the historical data for the next 6 months, 1 year, 2 year, and 3 year. But also, like, are there going to be corrections, right? Like, stocks just don't go up forever without kind of dips or corrections along the way. And so I think that's what people are trying to figure out. But, what do you think, right? You spend a lot of time all day analyzing this stuff. Like, what are your thoughts?
So everyone I'm talking to, all the Wall Street strategists, bankers, they're pretty bullish for the rest of the year. And, they're looking at very low VIX right now. The stock market just had its best 6 months in an election year, I think in 50 years, something like that. And there's a ton of money in money market funds. And that's I think it's like $6 trillion right now. And a lot of these guys are telling me that could go into equities whenever the time comes in the next few months. I think this morning's news with the JP Morgan strategist, it's probably a good sign for the bulls because it's the final bear capitulating, and it's getting harder and harder to be bearish. Mm-hmm. And even especially with the election coming up, the second half of an election year is better, I think, and we've already had 15% gain in the S&P 500. But something I want to drill in on a bit, the concentration of gains has been very tech heavy, and do you see any risks of maybe a bubble popping, or are there any parallels to the dot-com era?
Well, I think the dot-com bubble was a classic, kind of necessity for the development of a technology. You need a bunch of people to kind of see a couple of different either companies, products, pieces of technology, and they say, oh, wait a second, I can peek around the corner. This is going to be massive. And then what ends up happening is everyone pulls out their checkbook and everyone just starts putting money everywhere. The venture capitalists start writing checks. The public market starts allocating capital. Everyone is so excited about the promise of the technology. Well, if you go back to 99, 2000, 2001, those promises actually came true now. Like, the internet is awesome, right? Yep. It just took 15, 20 years for it to play out. And so the capital, the excitement, the hype got ahead of what actually was true in 99, 2000, 2001. And so you needed the correction. You needed to kind of go sideways for a while. And then, okay, now the technology is caught up. What I think is happening now is there's a bifurcation in technology. There's AI stocks, and then there are technology companies. The technology companies, for example, let's say something like Facebook. Right? Yeah, sure. Facebook is trying to figure out AI stuff as well, but like Facebook's a real company, right? There is not a lot of downside for a company that is producing as much revenue and cash as that business is. And so can the stock go down? Sure. But it's not like it's going to drop 50+% and not get immediately bid back up, right? And so you can go through a number of these companies, Google, Amazon, et cetera. There's a lot of opportunity, I think, for people to make the argument. These are real companies with real, financials that are continuing to improve, et cetera. Now, those technology stocks, although there is some overlap, are different than many of these stocks that are benefiting from kind of AI. So NVIDIA being, obviously the prime example, but I think there's a couple of others as well. And in that situation, I think people are saying to themselves, AI is going to be huge. I can peek around the corner. The question is it right now? Or will we see some deflation in the excitement there because people realize, hey, it's actually going to be like 10 years from now until we can do this. And, if you start to unpack this, like OpenAI and ChatGPT, it's technically a private market, business or nonprofit, whatever they're calling it now. But it was a, kind of phenomenon globally that opened everyone's eyes. Like that was the moment everyone peeked around the corner. And so NVIDIA is benefiting right now from tons of excitement, tons of people saying, hey, I need compute, I need chips, I need all this stuff. The question is not only can NVIDIA continue to dominate because they need to service their customers. That's like a self-inflicted wound thing, right? Either the customers all go away or NVIDIA makes a mistake. I don't think a lot of these customers are going to go away because the customers aren't only going to NVIDIA. They're also trying to build their own data centers, their own technologies. You're seeing competition show up, which I actually think is something that becomes pretty interesting. And so to your question about like, is there downside? There's always potential downside, right? But that money that's sitting in the money market funds, like they're chasing yield. When that yield starts to drop because we cut interest rates, like that cash is not just going to sit there and earn nothing. And so it's likely to go back into the equity markets, which will serve as this kind of tailwind. And so I tend to be a much bigger future bull, but I'm also not a trader. I don't care what happens in the next 3 months or 6 months. What I care about is over the next 5 years, will stocks be higher or lower? It's really, really hard right now to make an argument that they're not going to be higher 5 years from now than they are today.
Is there any risk of the enthusiasm for AI running out in the near term?
I think that you already see some portion of the population have less excitement today than they did previously. For example, when ChatGPT came out, it's all you heard about. Everyone was using it every day, et cetera. People outside of a work environment, I don't know how many people are still using it. So like, what is the retention number there? Now, they've driven billions of dollars of revenue. So obviously there's some good retention that's happening. But if you knew what that retention number was, that'd be an interesting data point. A second thing is there's kind of like, I think of it as like the nerd segment of AI. And then there's the like consumer segment. The nerd segment is, you start getting into, I was listening to an interview with Mark Zuckerberg recently, and he was talking about there's companies like OpenAI and a few others that are building kind of one LLM to service everybody. What Facebook believes is that you're actually going to have different models for different use cases. So they're creating a creator model, and that creator model is specifically tuned to help people who want to create content. It's not going to be good at doing anything else, right? And so you go to the parallels of like maybe the Bitcoin world. There used to be people who mined Bitcoin on their laptop. Now there is something called an ASIC, an application-specific integrated circuit, right? Whose specific job is to mine Bitcoin and do nothing else. And so this kind of push and pull between specialization versus generalization is already creating, fractionalization of the nerd segment. They're in, right? It's kind of like the hardcore crypto people. They're in crypto. These people are in AI. The consumer, I think, likes the idea. What they're trying to figure out is like, how does it improve my life? I don't care about the tech. I actually couldn't tell you a single thing about the model or the chip or this or that. What I want to know is when I go to Google now and I Google something, I see Google is using AI at the top. Are the answers right? Like that's where the excitement will end up coming. And so I think that is still a question mark. But the good news for the NVIDIAs of the world, et cetera, they don't need the consumer. right? What they actually need is they need their customers, which are other businesses, other, model providers, et cetera, to keep showing up. But I don't like you use AI every day. I see an opening bell to create the artwork. And so what has your experience been? And like, how excited are you? Are you more or less excited than you were when this stuff first came out?
I think it's become such an integral part of my day that it's actually not exciting now. I use it to generate images, and sometimes I use it to generate ideas for things to write about. I don't use it to write things, but it's pretty good at ideation. And but I'm also, as a reporter, I think that's a very specific trade to be using a large language model. But I know very few people that use it on a regular basis, which is why I think the enthusiasm is kind of tapering out. But I don't know if that's been reflected in the market yet, because all these tech stocks are still going a lot higher.
Today's episode is brought to you by CrossFi. CrossFi is the Apple Pay for crypto. For the first time in history, anyone with a Web3 wallet like MetaMask can spend crypto through a physical or virtual Visa card anywhere in the world where Visa is accepted. No more exchanges or middlemen. Just link your wallet, get your card, and start spending today. CrossFi card transactions have already been successfully processed in New York, Los Angeles, London, Dubai, China, Japan, and over 20 other countries. Be one of the first to get your hands on a CrossFi card and a prize pool of up to $3 million by joining and participating in their testnet today. You can go to xfi.foundation/users. Again, that's xfi.foundation/users. Go check it out today. Yeah. One other thing that people seem to not really be talking so much about is if the AI promise is real and these companies are actually able to produce as much productivity as they claim, there should be a lift in GDP. And if we get a lift in GDP, then we should actually have a bunch of advantages where our undisciplined monetary policy mistakes could be maybe not resolved, but the blow could be lessened. And so if you think about one of the most important metrics in the American economy is debt to GDP. There's two numbers, right? We know debt's going to keep going up because you have politicians who are going to make that decision and they're not going to stop. But the GDP number, like the AI world, may actually be a huge boom there. And so could you have politicians continuing to lay debt onto the economy? And maybe you can't drop debt to GDP, but could you keep it flat? Right? Because you have this productivity boom. And so I don't know what the answer is, right? I think that there's an increasing chance that that is likely. And those are the things maybe that are the most interesting to me, because what it does is it's not just about a single company getting a productivity boost or saving cost and driving more profit, which is powerful, but it's an economy-wide thing where actually the private market may take into their hands, we have to create a solution to this problem because the politicians are drunk and they're not going to stop spending.
Do you see the next few months of politics having a big sway on the market?
Are you not entertained?
Yeah.
I don't know. I didn't see the numbers for the debate. I got to imagine the debate was very popular. There were a lot of people who were watching. Look, it's this very weird thing where let's talk about the national debt, right? Republicans and Democrats all contribute to the national debt. And so each side likes to blame the other side. Oh, we don't, we're much more fiscally conservative, but look at these people, they're horrible, right? If you go back and you look, Clinton, Bush, Obama, right? Trump, Biden, all of them. They all contributed to the national debt. It's a structural issue. They have to do it or they risk pushing the economy into a bad situation. So I think that you can kind of take away the red versus blue when it comes to that. Now, if you go and you look at the stock market, I think that the number I saw was the stock market's up over 200% since 2016 election. 200%. Right? For an economy and a stock market that historically goes up at 8% a year, that's pretty good. And what you can actually see is that it went up under Trump and it went up under Biden. And so red versus blue, two people who obviously, have huge disagreements about, according to the debate, who's the best president ever, yeah. Who's got a better golf swing, all these different things that they were, debating. But stock market kept ripping. And I think a lot of it is people in the short term in the stock market care who the president is. But what we find out over and over again is that the United States is very unique in that the president has power but does not have enough power to have some massive impact. And I think it was Supreme Court Justice Anthony Scalia, I think is the one who was asked one time, explain the political process in the United States. And he goes, the one great attribute of the United States no one ever credits the United States with is deadlock. The way that the system is built with three branches of the government and this constant, check and balance, it's very hard to get things done. And he goes, and you all think that's a bad thing. It's actually one of the greatest parts of America is because it dampens volatility in either direction. So it's unlikely that Trump or Biden is going to do something that is so egregious that the stock market is going to, go down 30, 40%. It's also unlikely that either one of them is going to do something where it is going to go up 50%, right? And so if you look like the 25% annualized return for the S&P tech sector, some of that was under Trump, some of that was under Biden. And so it's just this element of like politics is a great intellectual exercise, but for your investment portfolio, not taxes, not wage growth, but just your investment portfolio, both of them over the last 8 years have been great. And so that violates a lot of narratives. And so what I think ends up occurring is people lump in everything else. Wage growth, taxes, inflation, et cetera. And that's actually a holistic evaluation. But if you just look at the portfolios, you have done well under both of those two presidents. And so it pulls into question, like maybe it's not the presidents, maybe it's actually just a economy and a structure and like, America's awesome and, stocks are going to keep going up.
Yeah. I mean, if you're just buying S&P 500 every month for for years on end, I think it's pretty agnostic to who's in the White House. What are some of the conversations you're having with other investors, like as far as how, maybe how they're positioning for the election or for the rest of the year, or whether they're trying to account for any risks?
I don't think that there is consensus. So maybe I'll just throw out a couple of anecdotal points. I have a friend who has told me multiple times he's considering selling all of his crypto on election day. And I asked him why, and he said that is potentially one of the tops of a crypto market. He goes, depending on who gets elected. Now, again, does it actually depend on who gets elected or not? Unclear. But one thought process, I don't necessarily agree with that, but I think it's an interesting data point. I think that there are a whole nother group of people who, with these prediction markets, there is Kaleshi, there is Polymarket, there's a couple of these. And people are saying, well, actually, why am I going to position my investment portfolio, which is really just an indirect way to try to take a bet on this election? Instead, I can go to a prediction market and I can just bet on the election, right? I can isolate the outcome that I want to bet on and expose myself to financially. So I think that's an interesting development. Those, were kind of sort of around, but not in the way that they are today in the last couple elections. And then I think that there are a lot of people, and you and I have been talking about this recently, home ownership is really bad, right? Like in terms of the ability for people to afford a home. A lot of them will yell and scream about the political candidate they disagree with as like they're the cause. But again, I think it's a structural thing. And if you think of the average American, your home makes up the majority of their net worth. And so if they are not able to buy a home, then they either have to take what money they have remaining and go put it into the stock market, in kind of other investable assets, or they sit in cash. And so in a weird way, home affordability may have one of the biggest impacts on investment portfolios. Even though it's your primary home, it still is the bulk of the average American's net worth. And so it is unclear to me that either candidate has an ability to get home affordability to a better place, because I don't think that it is something that policy can necessarily drive. It is something that supply demand and the previous inflation shock has created. And you can blame one, both, whatever you want. But in terms of moving forward, you get to be president for the day. How do you make homes more affordable? Maybe the only argument that I might say, okay, that's got a lot of, kind of weight to it, is like deregulate the housing market and allow people to go build housing. But if you actually look at a lot of that regulation, that's not national regulation. It's local zoning and processes, et cetera. And so, it's not a sexy headline, but like people for home affordability in your area, your local city council or your like local representative matters way more than who the president is. And people don't like that because they're like, oh, my city council's like full of, idiots, or my city council's full of geniuses, right? Like depending on which side you're on. So it just makes it much harder. What do you think the president should do? Like
as far as housing?
Well, just you get to be president for the day, right? And you've got to kind of get the U.S. economy in a better place. Are there certain like levers that you think pulling would be effective?
Yeah, I mean, honestly, if I was president, I think it would be super impossible to attack the debt. So I'd probably maybe ignore it for the whole, at least for the day, if not the term. Yeah, deregulating housing, that's an interesting one. I don't know enough about it to say how I would do it or if I would do it. Yeah, certainly I think regulation generally, maybe we've gone a bit overboard as far as what's possible and what is. Yeah, maybe that's the wrong. Might be the wrong guy to ask that question. Actually, do you have a 1 day outline of what you would do?
I don't think anything can get done in 1 day, but I do think there's some like important decisions that the president has to make. I do believe that there is stuff that can be done around housing, and again, from a national standpoint, it is much harder than at the local level. But I think that just encouraging more investment there. We live in a world where boldness and ambition is actually discouraged for our political leaders. And so an example would be, imagine a president saying, hey, for the next 12 months, we are going to have a housing boom. And the way we're going to have a housing boom is that we are going to do A, B, C, and D things to empower every home builder in America. We need to build 1 million houses, right? It's estimated that we probably have a deficiency of at least a couple 100,000, if not a couple million. But as a country, we are going to set a goal to build 1 million houses in 12 months. You call every home builder in America to the White House and you say, most countries look at the men and women in uniform that they are willing to send to defend their freedoms as this like national service. Right now in this room, you home builders, we're going to rely on you because we have millions of Americans who can't afford a home, and it's a supply-demand imbalance. And so what we are going to do is you're going to tell us what you need, and for 12 months, you're going to build as many homes as you possibly can. And you're going to build 50,000 homes. You're going to build 200,000 homes. And you just go through the line and you say, I'm going to hold you guys accountable to doing this. If you guys do this, the government will give you a financial bonus. You think we'll build 1 million homes? We'll have 1 million homes in 9 months instead of 12, right? But that is much more the way a corporation would work than a government. And so that's just not the mood, the approach, all this stuff. But I think that it shows there is a potential solution. It just takes that boldness, that ambition, et cetera, to go do it and to make a big deal about it. Right. We have, we give out presidential medals of freedom, again, for people, national service, all this kind of stuff. Give one to the home builder that builds the most homes over the next 12 months. Right. Make them a national hero. Because right now, one of the biggest problems facing America is home unaffordability. So if somebody went and put 100,000 people who didn't have a home off the street, we would say that's an amazing person. Look how philanthropic they are, etc. It's not exactly the same, but man, if we were able to celebrate one or many of the people who were able to solve this problem and treat them the way that we would treat an astronaut or treat a scientist with a big breakthrough or whatever, it would inspire more people to say, well, what other big problems are there in our society? Let's go try to do that. And so I just think that it's really hard to see a politician doing that in today's day and age, right? Because they just get, attacked the second that they say anything. But that's the type of stuff I think if you're the president, maybe not for a day, but for a month, you do that type of stuff. And I think that there's a ton of benefits that actually would start showing up in economic data, pretty quickly.
Sounds like the only things that would work would be breaking all the red tape around being a president. I think we covered a lot of stuff. And yeah, thank you for having me on the show.
Absolutely. Thanks so much for doing this.